Hey everybody, it's your boy Marcus Norman from Gentleman Style Podcast Show, your host and number one podcast coming to you live in America. And today we have an incredible man, Mr. Sean Tepper. He is the founder and CEO of his company, his platform, his fintech called Tykr. It's a platform that gives beginners as well as advanced investors the power to manage their own investments and beat the market. Get this, beat the market. Not just win, not just thrive, beat it. Tykr has proven to generate consistent returns between 15 and 50% per year. And he's the host of an incredible podcast. You know how I feel about podcasts. I love podcasts to death. So help me welcome to the stage the incredible, the amazing, Mr. Sean Tepper.
Marcus, how you doing?
Fantastic, sir. Fantastic. How are you? Welcome to the Gentleman Style Podcast Show.
I'm amazing, and with that kind of intro, if you could do that for me every day, that jump out of bed,
take on
the world, man. That's awesome.
Thank you. Give him another round of applause, y'all. Mr. Sean, you are phenomenal, sir. You are taking charge and leading. You someone I admire truly and I look up to. Even if we just recently met, you're just inspirational, and I follow your lead, sir. Podcast, business, your strategies, your forethought, your mind is just incredible. And you all will see this throughout the episode of this show. But I gotta dive in. I gotta ask what is your career backstory and how did it lead to investing?
Sure. Well, first off, you're very kind with all the compliments, and you're just peppering them all day. I usually don't get that, but I would be happy to provide you the career backstory. It's a fun story, good learning experiences through the way. So 15 years software engineering, primarily served as a project manager, and I had a small business from like 2006 through 2010. It was a service business, so creating software and websites. We also did some social media and some video services for small and mid-sized businesses. But the big, there are some big wins there, and then there are some lessons learned. So this by no means was a lucrative business model, trying to build it through the recession where businesses had very little money to spend. So you're kind of scraping by to provide jobs for people. That was okay. I was in my mid-20s and I needed a learning experience. The benefit was those 4 years where I got to work with hundreds of businesses and understand what kind of business models are scalable, which are not, which are easier to build and which are not so easy. So that was the big win. And I didn't see that as a big win until years later. 2010 hit. We fortunately we were growing at my own expense. I took very little salary just to pay my staff. It was about 5 people, and we went through a merger. And that merger wasn't a big liquidation event where you had a bunch of capital hit my bank account. The big win was more or less all debts and liabilities removed from the equation, which was at the time a big win for me. So it gave me a clean slate. And then I knew at this point, this was 2010 or 11, I knew that, okay, if I want to build wealth, you can work a job. Yes, you can trade your time for a paycheck, but it takes a long time. You can do it a lot faster by investing, right? Right. Instead of you working for money, you flip the equation so money works for you. And I said, okay, I'm a tech guy. Let's start investing in private tech businesses. And what I did is I started mentoring or providing some cash to small tech startups, new tech startups, with the hope to see those tech businesses, these are private businesses, these businesses take off like a rocket. 10x multiple, 100x multiple, right? Needless to say. Yeah. Yeah. Needless to say, a lot easier said than done. And this is the same world. This is called angel investing, where you invest your own money. It's very similar to venture capital investing. VC is just you raise money from other people, invest it in private businesses, hoping those businesses take off like a rocket, or IPO or sell. And to give you context here, you lose money in this type of investing about 90% of the time. You hope the 10% makes up for the losses. So I did that for about 5 years. And in the meantime, this is 2010 or 11, I made the transition. I started working for large corporations and project management. Not glamorous, but it was financially responsible. And it allowed me to get into big organizations. I worked for GE and Kohler, a few others as well. But once you're working in a big corporation, you can understand how they market, how they sell, how they really operate their business. And you can't really see how that happens unless you're on the inside. Like, you can read about business, right? You can do your homework from the outside, but you don't really learn how contracts are written, how negotiations happen, how to implement multi-million-dollar software platforms unless you're working in those businesses. And again, didn't love it, but it just was more experience to really led up to stock investing. So anyway, I've been doing that the last 10 years, or leading up to the launch of Tykr. And in 2015, is when I had that transition moment where I'm like, okay, angel investing isn't working. Like, sure, you're making some money, but you're losing money most of the time. Let's flip that equation where I can win most of the time. So I turned to the public market, but I looked at the guys that we all know and respect, like Warren Buffett, Charlie Munger. Their mentor is Ben Graham. And my mentor, he's younger than Charlie and Warren. His name is Phil Town. And I turned to these guys, and I knew that they're making consistent returns in the market, and they're beating the market. The question is, how are they doing that, right? These are not gambling men. These are not men that go to the casino and put all their money or all their chips on black, right? This is not their personality.
Vegas.
Right, exactly. They don't do that. They're not gamblers. So the question is how? And I knew it's related to some sort of math. So I just applied software engineering methodology, which that's my background, and started to create an algorithm in Excel. This is not a glamorous process, but I just read a lot of books, watched a lot of YouTube, and kind of discern what works and doesn't work. And I started testing with my own money in 2015. And thanks to Phil and Warren and Charlie and even Ben Graham, I was able to write an algorithm that allowed me to remove emotions from the equation. Like, when you look at stocks, I wanted a way to say, yes, that's a pretty good investment, or that's a pretty bad investment, with a high chance that I'm going to make money. Because I don't want to spend days researching, right? And within a year, I landed on an algorithm, and I made about 15% the first year. And I was like, you know what? Was that a fluke? Maybe. Let's keep going, right? Let's see where this goes. So every year I just kept refining this algorithm. In long story short, for everybody listening, it would take me about 5 to 10 minutes to analyze one stock. I'd have to look at the income statement, cash flow statement, balance sheet, and put that data point, or those data points, into this Excel sheet, and it would spit out pretty much a decision I could make. So I don't have to use emotions. I can use this tool. And I was able to generate consistent returns between 15 and 50% those 4 years. And that led to 2019, when I started talking to retail investors, which are everyday people like you and I that manage their own money, and then institutional investors, which are people who work in large mutual funds and large institutions that manage money. And I started showing them this tool and what it can do, and everybody across the board was like, hey, you should turn this into a software to share with others. So 2019, that was the decision. I'm like, let's do this. And it took about a year to build, right? Let's share this tool with others. So yeah, it took about a year, launched in July of 2020. And today we have over it's going on 10 months now. We have about 2,000 customers around the globe. About 80% of our customers are outside the US. And I'll provide a fun context here. This relates to podcasts and how important they are. A lot of people are listening to podcasts and watching YouTube on finance and personal finance. There's a ton of channels. There's a ton of podcasters out there. And these listeners are learning that, hey, I can do this on my own. The issue is there's no tool to help them guide the decisions along the way. Yes, you can listen to somebody, but is there a tool that can give you education and give you the clarity and help you make wise decisions? And there's a few, and there's a few that are very difficult to use, whereas Tykr is, I would say it's one of the easiest to use. It's very simplified, very approachable language. And yeah, that's really the need we're filling. And that's why we're growing so quickly around the globe. So turned into a longer story than I wanted, but that gives you a context of my background and what Tykr is.
So that's huge, right? That's huge context. And that gives some deep insight to the mind. I told you guys he was phenomenal, right? I told you guys the level of strategy that is on this man. And that's big, right? There's Robinhood, there's Square, there's Acorns, there's so many other platforms out there for investing, but none of them, they all either, like you said, some of them are algorithm based, right? Robo advisors, but none of them up until now, up until I found you, can have proven the market, right? None of them have outperformed the market. And that's the I don't want to say it, but I want to say it, the golden goose, right? That's what everybody's looking for. The silver bullet that hey, almost set it and forget it. So I'm going to pull the website. You have a website that people can go and check this out for themselves and see this for themselves. But one of the big things I wanted people to see is this is not just a fly by night business. This is something, and I'm glad that you broke that down, is that you've been proving the algorithm for years. So this isn't a fly by night company. This isn't something brand new that he's just trying out and you're the test dummy. This is a real functioning program. And so I'm going to bring it up to the big screen and so everyone can see it. So Tykr, this is a website and it's TYKR Pro, PRO. And Tykr is actually a free trial on here. So the easiest way to find value stocks. So as I scroll on the screen, can you talk about what my audience is looking at and is Tykr an algorithm that searches for you? How does it function? Can you give us the general functionality of this?
Yep. So Tykr is classified as a stock screener. It's different than a stock brokerage. Brokerage, we're all familiar with Robinhood, TD Ameritrade, and E-Trade are really the big three in the US. A broker is where you buy and sell stocks. It's really, you attach your bank account and then you can deposit funds to buy and sell. Tykr is just a screener. So you log in, you can see a list of stocks like you're looking at here. I know it's probably too small, but it's very easy to use. You can log in, you can see stocks, you can see a list, you can search by any stock you like. There's also a top 50 feature, top 50 on sale, which is kind of like an easy button. And if you want to see like the top 50 lowest risk stocks, I'll talk about that in a second. And then you can see the top 50 highest risk stocks. Right now, we have about 5,000 stocks in the platform. We're working on a new version of Tykr that'll go live this summer, which will move us to about 20,000 stocks. And give you a little context there, because we have so many customers outside the US. We needed a better data feed or a wider range of stocks to serve the global market. And I'll list those countries we'll serve, which include, of course, the US, but also Canada, Europe, India, China, and Australia, which are some of the biggest stock exchange markets in the world. So together we're about 20,000. But anyway, here's how easy it is to use. When you log in, a stock is either classified one of three ways: on sale, watch, overpriced. And on sale means that it's a potentially good investment, and I'll get to that in a second. And then overpriced is potentially bad investment. What my platform does that nobody else teaches is it's not just like if you log in, see on sale, and you buy, sure, you can make money. But what Tykr does is teaches you to go the extra mile. You need to understand the 4 M's of a business. So I'll teach your audience what that is real quick. A lot of people will read the news, or they'll look at a P/E ratio or some random number, and they'll go make a decision thereafter. The issue with that is it's very limited. There's not a lot of logic there. And what you want to do is you want to understand the math behind a stock or a business first. And Tykr does that for you automatically in seconds. So the mathematics, the hard part, that's all done. That's called the margin of safety, is really the first M. It's all the math, but you also need to look at the meaning, moat, and management. This encompasses those 4 M's. So you got margin of safety, meaning, moat, management. This is the fun part. This is the part anybody can do, and you can't use math for these other 3 M's. Meaning. So first off, Marcus, you got to ask yourself the question, do you know the business? Do you know the industry? Will the business be around in 10 years? You got to ask those questions. And I usually tell people, and this goes down to Warren Buffett 101, it's like, only invest in a business you know. Like me, I know tech really well, but I do not know pharmaceuticals. So I pretty much avoid pharmaceuticals, right? So stick to what you know, right?
Right.
The second one is the moat. So moat is how easy or hard is a business to duplicate. I like businesses that are really difficult to duplicate, like enterprise software. It's very hard getting customers. It's very hard creating big software that serves like corporations like Microsoft or GE or Caterpillar. That's hard to create. Businesses that have a lot of cash on hand have a wide moat, because that cash can be used to create new innovative products. It can be used to buy other companies, acquisitions, right? And it can be used to withstand downturns in the market. So cash moat is important. There's also brand moats. Like if you want a cola product and you walk into a grocery store or gas station, what are you looking for? Coke or Pepsi, right? Are you going to look for the off-brand, right? Yeah. You're not going to go for the off-brand. The same thing with a tissue. Everybody thinks of Kleenex. That's a brand moat. That can be hard to compete against.
So Tykr knows that? Tykr knows who are the top brands?
It doesn't know that. It does all the math for you, but it teaches you how to look at the meaning, moat, and management. There's a checklist. There's like a questionnaire that allows you to go through it. And long story short, if you were to do your own analysis on a stock, doing the math and then looking at the meaning, moat, and management, it can take you days, if not weeks, to understand if a stock is a wise investment. With Tykr, in seconds, you can see if it's on sale, watch, or overpriced. And sure, you could make a decision there, but go the extra mile. Understand the meaning, moat, and management. And if you do your homework in a half hour or less, you have a really good idea, is that stock a good investment or a bad investment? So, jumping back to the 4 M's, the last M is management. This is a fun one I like to talk about. A lot of people can relate to is, you ever hear the question, like, is somebody a good manager? Are they a good leader? Right?
Yeah. Too many times.
We know a lot of managers and unfortunately very few leaders. And there's a big difference between the two. So when we invest in a business, it's wise to do a little homework on that person, on that CEO. Like, are they spending their time being dramatic on social media, Twitter, right?
Papa John's.
Exactly, right? So think about the decisions they make in their life. Like, are they pretty boring? That's a good thing. We like people who like to stay off social media. Are they focused on the customer? That's a good thing. On the flip side of that, are the type of person that's buying Lamborghinis, yachts, private, like a third home in the Hamptons, and actually publicizing it? That's not the type of person we want to invest in. You look at some of the wealthiest people in the world. Warren Buffett, he bought a home in the 1950s. I think it was
his original home.
His original home, correct. It was, I believe it was less than $50,000. Yep. And he still lives in that same home today. He's a billionaire, lives in that same home. And there's other leaders that have driven like used Ford Tauruses that are 10 years old and they're CEO of a multi-billion-dollar company. Like, this is somebody who does not care about materialistic things. Like, this is somebody who cares about providing value to the customer. If somebody's like that, that's the checkbox. Like, okay, you have my attention. Right. We've got a leader here. So that's the fun research anybody can do on their own. So
love that. We have Mr. Sean. Ladies and gentlemen, Mr. Sean, we are going to go to a quick commercial break. We'll be right back. Stay tuned. Stay with us. Stay engaged. We'll be right back. Good day, podcast listeners. This is your boy, Marcus Norman of Gentleman Style Podcast Show. I wanted to let you guys know that we will be rolling out a new feature and adding a join sponsor button next to the subscriber button here at the bottom of your screen. Once you click the button, it will display 3 membership levels. Gentleman Gentry, which is our entry level, Duke Duchess, which is our season level, and the Emperor and Empress, which is our most sophisticated level, which you will receive unique perks and benefits at each differing level and gain access to our community tab. We will also be sharing polls, upcoming events, and interviews, as well as receive feedback from our sponsors directly. Your support helps me find new and exciting guests to bring to the stage live. Well, in order to get the higher end speakers, it requires, well, some, you guessed it, money. So thank you for tuning in to my channel. And if becoming a sponsor sounds good to you, then select the join button below and choose your desired sponsor level. Let's continue to grow and serve the future of generations of men and women to come. Love you guys. Bye. Hey everybody, it's your boy Marcus Norman from Gentleman Style Podcast Show. We have the incredible, amazing Mr. Sean Tepper, and he's spilling the tea on his incredible software, Tykr. And this is what's helping to get to a better place, do better business, and invest for retirement. Mr. Sean, one of the things you speak to, one of the things you talk about, that I hear is that you discuss that you can invest at any time. It's never too late. And a lot of people feel that way, right? A lot of people feel like I'm over the hill, right? I've missed out on my opportunity. I've missed out on Bitcoin. I missed out on Dogecoin. What age is the applicable age or the right age to start investing? And is it too late for the 30-year-old, a 40-year-old, a 50-year-old? Is it too late? Have they missed the opportunity on investing?
It's never too late. No matter what age you're at, you could be in your 20s, 30s, 40s, 50s, even your 60s. You should still be investing. Always.
Absolutely. Yeah. Absolutely. And so another big thing is how do you find stocks before they become mainstream? So you talked about angel investing and venture capital that you did in the first place. Does Tykr also do that? Does it find, because it mentions, it looks for, watch this. It also mentions up and coming, or look out for this, or keep an eye on this. And then it also tells you, hey, this is overpriced. How does it know if a stock is potential because it's done the math? Does it know this is going to become mainstream, or this is going to become bigger than what it is?
It does, actually. And we'll take a step back here. I'll just give everybody a little context of what Tykr really does. So there's 4 investment strategies in the stock market. And this is really important for everybody to pay attention to. There's value investing, there's growth stock investing, there's speculative investing, and then there's dividend investing. And Tykr focuses on value investing. So what it's doing, and anybody who knows how to read financial statements could go to work and not use Tykr at all. Like you could do the work manually. Tykr just saves you a bunch of time, but it's actually a very simple but boring process of looking at, and I'll give everybody examples here. Look at the income statement and the revenues over the last 5 years. Are those revenues increasing or decreasing? Makes sense if they're increasing, right? Well, let's go down a few lines to the net income. Your profits. Is the net income increasing or decreasing? Then you want to jump to the earnings per share. Same thing, increasing or decreasing. You look at the cash flow statement, your free cash flow is the line there. How much cash is on hand? Is that increasing or decreasing? Then you jump over to the balance sheet. There's a few more lines there you're looking at, but one of the key ones to pay attention to is debt. Like, is the debt increasing or decreasing? Like, once you look at these trends and all the most important lines, you can see where this business is going. And what Tykr does is it's analyzing 5 years of data between those points and showing the movements of moving up or moving down. And it really spits that out in simplified terms for us. I love it because it saves me a bunch of time, but it's looking at those numbers. And this goes back to your question. Can it catch big wins? Like, let's say you would have invested in Amazon, Netflix, or Facebook in the 2000s. Like,
yes,
right? You'd have a ton of money.
Right. Be done. Be on my island next to yours.
It seems like a infrastructure problem, but anyway, with value stock investing, it's going to find really safe. These are usually, I will say this to the audience, these are usually pretty boring businesses, pretty safe, pretty boring, but you can catch some really winning stocks before they become mainstream. And I would like to think I've got some of those in my own portfolio. It can also, it can teach you or steer you away from really speculative investments, dangerous investments. GameStop, right? Remember that going on a few months ago?
That was a mess.
AMC is another one. Koss, if anybody is familiar with Koss headphones, they were all over Reddit as well. These businesses have horrible financial statements, but if everybody's investing in them, are you going to follow suit? If everybody's jumping on the cliff, are you going to do it too? You know, you want to use a tool that really, here's the truth. Here is the absolute truth. The fundamentals of the business, meaning the financials, are they good? Are they bad? In most cases, I will say this, most businesses fail, you know, on Tykr. It's very rigorous. It cuts through the noise. And I love it when like somebody out there is like, hey, I just heard this news on this XYZ stock. It's going to be the next high flyer. I always smirk and say, oh, really? Let's have a closer look. And I'll just jump over to Tykr. And in most cases, it's like, it's just a garbage business. And it may hit like a target point and jump up one day, but the next day you could see it drop 50%. It's just too risky. So,
and lose everything.
Yeah, exactly. Yeah.
So Tykr, what it sounds like to me is Tykr, and thank you for breaking that down so delicately. It sounds like to me Tykr is making recommendations. It's not actually buying into these investments. It's just showing you it's making a recommendation to you, and then as a user of the software, you make the purchase. So I still have to go and physically make the purchase of that stock. Am I correct?
That's correct. Yep. Okay.
This sounds like $1 million platform. How much does it cost? How much should I be investing in a month in Tykr?
Yeah, Tykr has a very low barrier to entry because it's considered a SaaS, software as a service. So we want a lot of people using it, kind of like Netflix, right? So it's a 14-day free trial, and there's 2 price points. There's the basic and pro. Basic is $19 a month, and then the pro is $39. And of course, if you opt to purchase, annual memberships, you get like a 40% discount right now. So there are a lot of people that just like, forget it. I'll just go with the annual and save a bunch of money. So we try to be very inclusive of people all over the world, and we wanted a price point that is pretty attractive for a lot of people. No matter where you live, you can easily get in and start using this tool. There are platforms out there, they can be thousands of dollars per month, and we didn't want to do that. I think I lost him. Hey, Marcus, you there?
Sorry about that. I'm back.
There he is.
Sorry about that, y'all. Apologize. That's the beauty of streaming live. But you said this is a SaaS, so it can be invested $1,000 a month, but you make it affordable with a basic $19 a month. And the reason why you do it, you said there's a strategy. That's why I dropped out on. Sorry about that.
Sure. Yeah, with Tykr, we consider it, and it falls in this category of a low touch SaaS. Some people may say low touch is less than $20. Some people may say less than $50 a month, but you want a price point that is pretty low barrier to entry, so a lot of people can get in and start using it. And that's all. We try to be very warm and welcoming. We have a really solid community. If you were to join, you can join our Facebook group, and there's a lot of people who love engaging in stock discussions and what's going on in the market. And unfortunately, we do attract a lot of like-minded people. These are people who don't like to gamble. They don't like taking big risks. They're not traders. These are investors. In quick definition there, some people can get those mixed up. A trader is looking to buy and sell stocks either the same day or the next day or thereafter is a swing trade. They're looking for short-term gains, looking for a quick buck. Tykr does not attract that type of audience. We want people who they're looking for safer investments. They want to build their wealth through compound interest. And the big difference is trading, you're still working for the dollar. It takes time. You're reading charts. You're working all day. I've got a buddy that does Forex trading. He works 12 hours a day on it. It's a lot of journaling. It's a lot of chart reading. Foreign exchange is about trading with different exchanges around the world. So he's being conscious of other time zones and other countries. And when their exchanges are open, that's why you have that 12-hour window where it's constantly working. And he's like, I like it. I like the rush, but it's a ridiculous amount of work. And this guy he's an ex-plumber. And he's like, plumbing is almost easier than doing trading. Whereas with investing, you flip that equation and money's working for you. I like that. I like working for money, I guess. It's a necessity, but I like passive. When money, I like when money's working for me. Passive income that's the best. That way I can get out, enjoy life. I can enjoy my hobbies. And I'm not somebody who likes working around the clock. I don't like being glued to the computer. So there's more to life.
There's a whole wide world out there. Thank you, Mr. Sean Tepper here, spilling the absolute tea on this incredible platform. Where have you been, sir? I feel like I don't know how I know how I found you, but I'm glad I found you. And I feel like I found you too late. Is it too late for people to get on Tykr? Is it too late? Did we miss an opportunity here? What do you have in store? What do you have planned?
Yeah, I'll give you guys a little sneak peek of what's coming soon, but it's always wise to invest in the market. Always. I mean, we're doing pretty well right now. The last 3 months, there was volatility, so it's probably a little more of a buying opportunity. The market was going down a little bit, but I mean, the market's in a really good shape. Now is the time to get in. This is a great opportunity. There's no big red flags that I see in the upcoming future, right? Foreign trade seems to be doing pretty good. Yeah, I think we're in a really good spot. There's a lot of great companies that are thriving right now, and of course, Tykr can help you out there. So here's a little preview of what's coming soon. So Tykr is launching. I mentioned the 20,000 stocks globally. That's coming this summer. We're going to have a whole new look and feel, new platform. We'll be adding new features. But one of the big wins. This is one of the new features that I'm really excited for. It shows the historical performance of charts. It shows the points in time in history when stocks change between on sale, watch, and overpriced. So what that means is, let's say you want to really back test visually, does Tykr work? Well, this actual chart will show you, to a pretty high percentage of how accurate it is. For example, let's say a stock changes from overpriced to on sale in 2017. What happens? If it technically changes to overpriced, technically changes to on sale, it's green, should show the stock going up. Does it show the stocks going up? Well, I tell you what, the testing we've been doing right now behind the scenes, in most cases, it does. And on the flip side of that equation, if it changes from on sale to overpriced, which it changes from green to red, what happens then? In a lot of cases, it shows the stocks going down. So people can visually see this thing working in the past. So what it does is essentially it's a confidence booster for people, because at the end of the day, they're going to look at this, be like, okay, stock's on sale. I trust Tykr. I trust the algorithm. I trust Sean, but I still I'm still a little skeptical, and you should be, right? Like I would be too, but this chart is kind of that extra little oomph that is like, okay, so I'm looking at this stock here and it's predicting the moves that the stock is actually making. And that's hard to do.
So it's giving you a apples to apples comparison in the past history. So it's saying this is what Tykr recommended in 2017. And then people can now take that data and look at what the actual stock did on that same date, at that same time period, and see if Tykr was right. Is that what's coming down the pipeline?
That's it. Yep.
Wow. That's huge. You all have to get on board with this platform. You can't get this anywhere else except on the Gentleman Style Podcast Show or connecting with Mr. Sean himself. He has an incredible platform. The man is doing incredible things. For my audio listeners, this is Tykr, Tykr.pro. Mr. Sean, how can my audience grow with you? How can we connect with you? How can we learn and support you and get behind this incredible movement?
Just go to Tykr.pro. Get started. The email sequences that are sent to you thereafter are super easy. There's an onboarding sequence that provides that education, and then there's links to the Facebook group and all that good stuff. So just keep it simple. Go to Tykr.pro.
Tykr.pro. Love it, love it, love it. This is Mr. Sean Tepper, incredible CEO, founder, and a mathematical genius. This is huge. Mr. Sean, I want to thank you, sir, for taking your time out of your busy day to give back in this way. This is phenomenal. And I thank you. This is huge. I need to, as soon as we get done, I got to check this out myself. I got to do some more and get on board with this because I feel like I've fallen behind on my investing. And I'm glad I found you. Sir, I want to say this to you publicly. Don't ever quit. Don't ever give up. Don't ever stop because we need you, right? The world needs what you're doing. You are phenomenal, sir. And thank you all from my audience for tuning in to the Gentleman Style platform. I hope this message has served you. I hope Mr. Sean has served you and given back. And this helps inspire you in some way to get in the game and get to better investing. Thank you all for tuning in. Like I end every show, take care of your families, take care of your business, and take care of business. This is Marcus Norman of Gentleman Style Platform and Mr. Sean Tepper. Thank you guys. Love you. Bye.